Is there an argument to be made that there won't be any cuts this year, or maybe one?
You could get there in two different ways. We have four cuts, right? So we don't. So I think the way you would have to get there. So ultimately we think the Fed follows their models, right? And the models would say you got to go to a low 3% Fed funds rate, right? Not 4 or not above 4. But it's highly sensitive to the data. So if you don't get a slowdown, right? If the top 20% keeps carrying the economy and inflation stays at these levels, then you can start to justify the market pricing.
Right.
Now, if you then also get tariffs on top of that, then you can even start to think about, well, do they maybe have to reverse some of these? Because the way we think about the tariff impact for, say, a China tariff is if you exempt the goods where China is dominant, so in our forecast, we exclude 25% of all the goods where you have no ability to buy anything else, that greatly lowers the inflation impact, right? So if you do across-the-board tariffs, it's much more inflationary than if you start to exempt the things where you have no alternative.